What's up, guys? Welcome back to DCA. Today, what we're going to do is continue our look at on-chain metrics for Bitcoin. We're doing this because on-chain metrics can really show you what's going on behind the scenes with investor behavior. It can show you, are long-term holders acquiring coins right now? Has retail fled the market? Is the smart money buying right now in anticipation of an upcoming bull run? On-chain metrics can really identify this type of behavior, and that's why we're going to look at this today. So if you remember from yesterday, we talked about dormancy. Dormancy is the number of coin days destroyed over volume. And remember, a coin day is each day that a Bitcoin sits in a wallet, it accrues one coin day. So if a Bitcoin sits in a wallet for 100 days without moving, it accrues 100 coin days. So now let's say you have two Bitcoin. One is sitting in a wallet for 100 days, one is sitting in a wallet for 50 days, and both of them move out of those wallets. So what you do is 100 plus 50 equals 150. And since the volume was 2, it's 150 divided by 2. So the dormancy was 75. In other words, on average, 75 coin days were destroyed on that day. And the reason that you want to know this is because it tells you basically, are long-term holders holding their coins or are they moving them? If you have a low dormancy value, that is typically a very bullish sign. It indicates that long-term holders are accruing the asset. And when you have a high dormancy, we'll take a look. So this is your dormancy value. And there's a couple key things that you need to see here. So first of all, notice how the dormancy is in green. Orange is price of Bitcoin. Notice how we hit these peaks. So we have a peak here, and in general, we have a peak up here. What this means is that during these times, remember, high dormancy indicates long-term holders are selling. Because if we go back and look, remember, coin days destroyed over volume. So if you have a lot of coin days destroyed, that means people that have been holding their Bitcoin for a long time are now spending them. Okay. And that just makes sense. If you've been sitting on Bitcoin, if you go back and you look and you're sitting on Bitcoin back at $200 and then, the market is up here at $20,000, it only makes sense to sell, to take profits. So during those times, lots of coin days are destroyed because you're seeing a lot of old Bitcoins that have just been sitting in a wallet for an extended period of time. You're seeing them mobilized and sold, and therefore you have an increased dormancy. If you go to this market cycle, what have we seen? The same thing. You see here, the dormancy is highest right at this first market cycle peak. So when Bitcoin was between, 40, 50, up to $60,000, a lot of older coins are being sold because they're people who have been sitting on $3,000, $4,000, $5,000, $10,000 Bitcoin, and now they're realizing a large profit. So in just a few short years, they're taking Bitcoin that they maybe bought at $10,000 in this bear market, and they're getting 400, 500, 600% profit on it. Okay. If you look at what's happening right now, we are seeing the dormancy extend to levels that are just rapidly dropping. Now, there have been spikes. We saw a spike here in August and a spike here in November. And if you remember, in August, we had a place where we had just went from a $30,000 Bitcoin up to around $50,000. So it makes sense that the dormancy increased during that time. Then we went all the way back down to around $40,000 and then up to $69,000. And sure enough, you saw another spike. But overall, the dormancy has been decreasing throughout the length of 2021. And now into 2022, we're continuing to see it on this winding downtrend. Okay, guys, so this is the last thing I want to show you. This is the net hodler position change. And this says if we're in the green, the number of coin days being accrued, so all of the Bitcoin held in wallets and the number of coin days they are accruing, it outweighs the number being destroyed. And it's a rolling 30-day average. So when you're in the green, that means more Bitcoin are being held. When you're in the red, that means long-term holders are mobilizing their Bitcoin that they've had sitting in wallets, and they're mobilizing them, putting them on the market. Okay, so when we're in the red, this can be caused by two types of events. Number one, it happens in the setting of bull markets. Number two, it happens in the setting of large capitulation events. So if you look back in 2017, if we just look at this area right here, you see that we had this large net Bitcoin destruction, meaning the long-term holders were mobilizing their coins. Prior to that, you had a net acquisition or a net accumulation. And when did this transition? When did the transition occur from a net accumulation into a net distribution? And what we can see is this occurred right around, if we just bring this down here, it occurred right around here. Okay. And sure enough, what did that correspond to? That corresponded to the prior all-time high back in 2013. So we're seeing this place where people start to mobilize their coins when we reach a prior all-time high. And we can see it play out again here. If we just come from our all-time high in 2018 over to here, you see that's right around when the accumulation of Bitcoin transitions into distribution. In other words, long-term holders selling. Okay. So we've seen this play out, and how this typically goes is people are going to be acquiring Bitcoin during the long-term hodlers are going to be acquiring Bitcoin during these depressed price levels. Okay. And we've seen this multiple times. So where has our accumulation occurred? It happens over here, in 2016 and early 2017. It happened all through 2018, most of 2019, and the early stages of 2020. Even, the early and mid stages of 2020. You have these large green areas where Bitcoin is being accumulated. Okay. Now, sure, in 2019, you did have a fairly large price run in the middle of 2019. But for the most part, 2018, 2019, and most of 2020 were accumulation phases. Then in these bull markets, like you saw in 2021 and 2017, you have massive coin destruction. So the long-term holders are selling their coins. That leaves us with, well, where are we at now? And this is what's happened right now. And you can see that basically it's as simple as this. The long-term holders have started to reacquire the asset. That is because we've showed in many different ways now over the last few weeks, retail market has essentially fled. So now you have the smart money acquiring the asset. Okay. So we've switched to a position of net accumulation. Now you can see that, here in August and then November, sure, we did switch over to net distribution just for two very small periods of time. And we said those were the times where we were at 30,000 and we went up to 50,000 in just a few weeks. And then we corrected down to 40,000 and went up to 69,000. And there was a small net distribution during that time. But right after, we've switched now back into net accumulation. So remember, net accumulation occurs during these periods of time, these accumulation periods, and these can play out over years, and they typically do. In fact, the price tends to trend down during these times, and that's because there is a general lack of retail interest. So we say that it's bullish, but that's because, as an investor, we're thinking in terms of the long term. And what we're seeing is long-term holders are acquiring the asset. Not, this is not the typical type of pattern you would see in the setting of a bull market, in a immediate bull market. This is the type of pattern you see for someone who's thinking about making multiple 100% gains in the future in a year or 2 years. Now, it doesn't mean that something can't spur the market and drive retail interest to come back into Bitcoin, because there's always the potential that that happens. But in the short term, typically when you're seeing this pattern that we're seeing right now, this is a sign of long-term smart money hodlers buying the asset while they believe that the price is undervalued. Okay, long-term undervalued. If you follow this channel, you know that I take a long-term perspective. I don't care what's happening right now for the most part. It's interesting to analyze what's happening in the moment, but I prefer to look at the market through the long-term perspective, because it's my contention that that is the best way to approach the market, is through the long term. And this that we're seeing now is certainly a long-term bullish sign. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. You can head over to the Discord channel, where we do a lot of discussion about the macro level picture of the cryptocurrency asset class. You can also sign up for the DCA index risk model on the Discord channel. This is a risk model that I've developed, which helps you to identify where market cycle peaks and bottoms may occur. It's a trading view indicator. I have it for Bitcoin, Ethereum, and almost all of the top altcoins. You can sign up for there and I'll send it out to you. So that's it for this one, guys. Until next time, as usual, see you.